Welcome to the future of money. Come with us on this journey into the world of Bitcoin, blockchain and crypto projects. You're going to meet the trailblazers. These people have changed my life and they may very well do the same for you. Welcome back, hard forkers. Today we're joined by John Mullen, co-founder and council member of mantradao. Welcome along, John. Good to have you here.
Yeah, thanks guys. Appreciate it. Really excited to share a little bit more about what we're up to.
Yeah, we're looking forward to it as well. Welcome back to my co-hosts, Stefano and Mr. Gonzo.
Oh,
hello. John, if you could really give the basics for newbies that are coming into the space. Obviously, there's been a lot of hype around you guys. We were talking about your project on our trading show a couple of weeks ago. Your price has had some pretty awesome action in the last month. Give us the overview of what mantradao is all about.
Sure. Yeah. So mantradao is a project we launched back in August of last year, like really right at the pinnacle of the DeFi summer bubble. And basically, it's meant to be a community-governed platform, building a number of different DeFi services, particularly for the Polkadot ecosystem and network, but with a cross-chain emphasis and kind of an agnostic approach to how we kind of build our products. So since our launch back in August, we've built a number of different products, which I'll get into. We're pretty excited about the progress that we've made. It's been an interesting road. Since we launched, we've seen a bunch of ups and downs. We got hit pretty hard by the pop of the DeFi bubble right after we launched, plus with some, significant investor unlock sell pressure that had some negative action on the price, and the community was in a bit of an uproar. But we've started to come roaring. But
you've got that classic chart. Fortunately, it's heading back in the right direction now.
Yes. So we've basically used that time to launch a bunch of different stuff. And I think the long tail progress that we're making is pretty significant. The center of our business really focuses around staking infrastructure and kind of the bridge between proof of stake and Web3 and kind of DeFi protocols. So we, as a kind of a core part of our business, we run validators. So we run nodes for many of the top proof of stake networks out there. So we're running nodes for Polkadot, for Kusama, for Atom, Kava, Luna, Band, eMoney, Fuse, Tomo Chain, Cardia Chain, Matic, a couple others that we'll be announcing shortly.
Come on, we're trying to break the inside knowledge to our audience here, John.
A bunch of new ones coming online pretty soon, which are going to be pretty cool. But the model here is that we basically run these businesses and these nodes, and we take significant positions in all these nodes ourselves. So we have significant skin in the game for any network that we're validating. But essentially, the model is that users can come and delegate or nominate to these nodes, and they're rewarded not only from the payouts from the proof of stake, like staking rewards, validator rewards, but also with some additional bonuses paid in our native token. So basically, we've tokenized the validator as a service business, essentially. And to date, I don't really see anyone that's done that just yet. That's kind of a cool piece of what we're doing. We've got, again, like I said, like 12 or 15 nodes up and running. We got about 130-ish million worth of assets staked on these nodes. And those are churning revenue, pretty nicely for us. And the model there as well is that we take 50% of those revenues and we use it to continually buy back Ohm tokens off the market. And this will be removed from circulation on a continuous basis. 25% of that goes into this thing called the Mantra Pool, which is this other product that we launched, which is a gamified kind of lottery system where basically users can spend Ohm tokens to come into the pool, and they can essentially earn or have a chance to win 25% of each week's rewards. So as our nodes grow, as the delegation grows, these rewards become bigger and bigger and bigger on a weekly basis. And what it's doing is, again, the user can get lucky and they can win. We have 5 winners every week. Currently, it's about $1,500 USD and 3.3 ETH per week. It's currently what the rewards are. So it's not an insignificant amount. And basically, they just spend the Ohm tokens and they don't get them back, but they're removed from circulation. So it's another kind of deflationary element, gamified, just gets people into it. The one issue that we've had is it's on Ethereum. Ethereum's expensive at the moment. So without giving too much explicit details, this is a particular product we are definitely going to be moving, or at least having an option on a layer 2 solution or a more scalable network, at least until Polkadot and Substrate is a bit more flushed out for us.
Could you shed any light on which layer 2 project you might be using?
So we've been looking at BSC, not that that's exactly layer 2, but Matic is a big one for us, or Polygon.
Big fan.
Big fan. We're one of the top validators for those guys. Really like Zendit and the crew. Shout out to Polygon. We have some cool stuff coming, and that's going to be announced with them next week, I think.
You just made my day. I put more money on Polygon last night.
That's been a good one for us too. We took a pretty substantial position back in September for our node, and that's done really, really well. So we've actually, to be honest, like, we were really fortunate that our timing was good because, again, right after everything popped was right when we were, deploying a bunch of capital into these node infrastructures and these assets that we're seeding and funding the nodes with. So we got everything at, rock bottom prices,
nice,
which is since
catching nodes.
We have been. The nodes. The treasury is looking good.
Nice.
Just from that perspective, I'm fortunate that we raised back then, and now we're not, like, new projects that are coming out, potentially our competitors are raising at a significant higher valuation of most of these assets or higher price points. So anyway, so we're exploring layer 2, not just for this mantra pool game, but also for some of these other products that I'll talk about. We've got an integrated staking platform. So I mentioned that we run validators, proof of stake nodes. We also run Ethereum or like DeFi staking pools. So we run, stake X token, get X token, stake X token, get NFT, stake X token, get whatever. And we also have like liquidity mining. So you can, stake Uniswap LP tokens, and you can get rewarded for, providing liquidity on the platform, get your liquidity provider fees, as well as an additional interest on our native platform. I think we have like 5 or 6 different Ethereum pools on there, but we should have another 6 or 7 in the coming month or so. As far as I know, we've launched a money markets lending product called Zentrist. Basically, users can supply assets, currently ERC20 versions of assets, or Ethereum-based assets, and they can then enable it as collateral and borrow against it. This is an over-collateralized product at the moment. It's basically like, think of it as like a cream or compound style product. We have about 45 or 46 assets on there, ranging from blue chips to kind of more out there, up and coming projects. This product's growing pretty nicely. We're excited about that. And where that's headed. A lot of interesting projects are coming to try to get on this, because it's hard to get on Compound. And there's not too many options of where you can have a supply and borrow market. And basically, if users come and use this product, they can supply any of their favorite assets, borrow against it. They can borrow stable coins, they can borrow whatever, and they also farm Ohm at the same time. So similar to how Compound had it in the beginning. And what else?
I have a question in regards to like the node staking. Like when you have all the cross chain and all the different nodes, how do you keep that non-custodial? So like everybody you need a wallet for each one if you're staking with you guys, or how does that work?
Yeah. So we don't touch. So all of our products is are non-custodial. We don't touch anyone's assets. We don't custody anyone's assets. If you're staking on our dot node, you essentially just nominate or bond it through Polkadot.js, for example, through their smart contracts. And we don't touch it. And the way that it works, though, is let's just use Polkadot as an example, because this is one of the ones that we've integrated where you can earn the additional Ohm. So basically, you delegate or nominate either your Polkadot or your Kusama to our nodes, and basically you can bind your Polkadot address with your Ethereum address on our platform. And basically we're able to go and then kind of track the history of both chains, and the transaction histories, see how long you've been on there, see how long you've been nominating to us, see how much percentage of the pool you're making up. And then we have a specific amount per month that's basically given to those nominators if they bind. And I think at present it's about 500,000 Ohm per blockchain. So it's not an insignificant amount of tokens on a monthly basis. And these are vested tokens, so I will say that. So if you have 2 options, you can short or you can long claim it. Short claim, you can get 20% after a month and you give up 80. Long claim, you get 100% after 6 months. If you short claim it, you short claim it, you take 20% after a month. 40% of that goes back to the long claimers. 40%, the other remaining 40% goes back to the foundation, which is basically just refilling our stake and rewards pool. So we'll continue to be able to fund these initiatives, not just on DOT and Kusama, but on Atom, on Luna, on Matic, on whatever. So that's basically how that works. We're launching a launchpad. I mean, everyone's doing launchpads nowadays, but this has always been in the plans.
It's like the DApp of the day, DApp of the week.
It is.
So many. Wow.
Yeah, so many for sure. This was never like our core, but it's just a nice feature. We invest in a ton of projects because we are like a community ecosystem focused type of project. So we support all different types of chains. We support all different types of networks, DeFi, layer ones, whatever. And people like to come and they can run staking pools on us. They can do the Zendit integrations. They can do all these different things straight out of the gate, which is one thing I think you can't get on a lot of these other existing launchpads at the moment. Obviously we invest alongside, so we always take stakes and everything. We put our money where our mouth is, so to speak. Some of the features there. We have the fixed swap pools, which is kind of the traditional ones that you've seen. We have Dutch auctions that we're going to be doing. We're also going to be doing this on a multi-chain basis. So Ethereum, meh and meh. 2 more coming. May or may not have mentioned them already. And yeah, so we're excited about that, to have like a true multi-chain product on that one as well. And we're doing a very cool substrate, which is like substrate-based product, which is really the core of where everything's moving. And this is an integrated money markets protocol, as well as stablecoin minting, multi-collateral CDP style. So like, think Aave plus MakerDAO, with the flash loans and all that other stuff included. But multi-chain, multi-network, as well as like wrapped around a credit model. So we're having this kind of pseudonymous credit rating protocol called Karma Protocol, which allows, through transaction histories, through all these other different pieces of information that we're able to gather, to create a credit model based off of your participation within our platform and your past history. So that was basically moving us towards truly being able to offer credit under collateralized lending, which we think is going to be quite big in the future.
So, yeah, depending on how much like your collateral is like a base score, I guess, right? And then as you do return good credit score stuff, it amplifies it, kind of thing. You get
exactly
lower rates and more capacity.
Exactly. And we have like this kind of reputation mechanism built in. We're a very community focused project. So a lot of it's about like we're actually working with a very, very, very smart team of economists at the moment, and we're trying to figure out what are the triggers that make people want to continue to participate in a like a good actor way, or what's the things that is going to make people move away and maybe renege on their loan and not pay back. So these are like very interesting questions, but I mean, it's crazy some of the findings that they said that they found, and I think like the vast majority of people are not paying back loans in crypto.
You need some like rug protection or something, right?
So yeah, you need rug protection. You need enforcement. You need, so how do you enforce it, right? That's an expensive business. How do you even find out who some of these people are? How do you connect it to a wallet? These are all questions. What are the economic levers you can push and press to make it so that it's painful for them to not do that? And one of those could be, we won't give you those like inflationary rewards, or that, the incentivization rewards that you would get until you pay back, for example. But then you have to figure out the ratio of what is more important, and make sure that the token supports enough value that it economically makes sense to always pay back. And that's the question. How do we answer this? And that's what we're trying to figure out. So it's immensely interesting. It's complicated, but it's quite a fun process to work through. I guess the only other thing I'd like to add in terms of like products we're building, we're working on a AMM DEX swapping mechanism of sorts. But we're putting in a bit of our own flair there. I can't say too much about that at the moment, but that should be pretty big if we do it properly.
All right. Can I ask you about the lending?
Sure.
The collateral, is it based on like OHM token value or USD value? Because like a lot of the lending protocols, right? Like they'll get liquidated because like the USD value will tank in these crazy wicks that they have in the market, People get liquidated, and then it bounces up 2 seconds later. Like Nexo and Crow and all these and Aave, all these, USD valued lending protocols when the collateral is like, link token or something that's not based on USD. Is it similar with
So there's two elements, right? So we have the money markets part, which is basically you can enable any number of different collateral tokens. Although these tokens tend to be highly correlated regardless. Bitcoin shits the bed. A lot of stuff tends to shit the bed, and vice versa. So currently that is actually a USD like pegged product. It's not really exactly pegged. That's not exactly the right word, but it's denominated in USD. But liquidations are not enforced by the protocol itself. You actually need someone to come in and liquidate people. If they see that happen, for example. On the stablecoin side, which is basically, you'll have a multi-collateral debt position, which could, be comprised of It could be comprised of BTC. Could be comprised of DOT, could be comprised of a number of different things. And you're essentially going to be minting our own native stablecoin, which is, that's a totally different mechanism though as well. So we're basically doing it in a way that the users will have the option about how they choose what collateral to go where and which, what they want to borrow against for, whether it's money markets or for minting stablecoins. So that's also a tricky question because, you're piling collateral on collateral, and then you're kind of, putting in all these different pieces. So how do we manage
one little
that
piece that wicks out, and then you're.
Yeah, you got to be careful. So that's why we're working with some economists in the U.S. who are incredibly much more smart than I am, who are good at this kind of stuff. Not that we can't figure it out, but these guys, this is their bread and butter. It's been an exciting couple months working on this particular project with them.
Nice.
Fantastic.
Yeah, so that's mantradao in a nutshell.
Yeah, very good. I mean, on that note, what would you say is the flagship, the one thing that you think you do better than everything else out there at the moment?
I think I think there's a couple of things. I do like the fact that our validator business model is a unique one. Again, there's no one who's tokenized it like we have at this point. So you're basically betting on the fact that you continually have yield paying assets, as long as you're delegating to our nodes, that these are going to continue generating revenues no matter what, right? Maybe that goes down in USD value, but in the native token value, you're going to continue generating rewards. And for us, that's good. I think the other thing is we definitely take a super big emphasis on a community-centric approach. So we really do engage with the community all the time. We have our Sherpas. They're called the Sherpas. It's the mantradao community, and they're super engaged. They're super active. I think at some point in time, who knows? Maybe they can challenge the Link Marines or the XRP Army, and if we get big enough. The Sherpas are not as like killer. They tend to be pretty nice guys.
Are the Sherpas the guys that do the liquidations?
I don't think the Sherpas are the ones doing that, to be honest. No, so again, I think our community is super strong. We're global by nature. When we raised our token offering back in August, I think we had like almost 90 countries participate, which I just found mind-blowing to me. Like, how the hell did you hear about our little project? And it's continued to grow since then. So, I think we're also, we just ship products. Like, since we've launched, we've launched like 7 or 8 different things. We have really tight schedules that probably we shouldn't be having, but we always make it work. I think those are some of the key things for us. I mean, we've been in the space a long time. We're super connected. And, we have good deal flow coming on the Zendit product. We have, just everything's turning in the right direction, where our tokenomics is to the point where all of our pre-sale investors are all out. They've all been unlocked. So, it's price discovery time, to be honest. Let's see where this can go.
It's going in a good direction at the moment, John. So, hopefully that continues. I've also had a bit of a dig around, and some of the people that were involved in the initial financing of Jackie, one of your marketing people, fantastic guy with a very good pedigree in the space. So maybe Stefano, I'll get you to jump in with any questions you've got at this point, and we'll fire a few questions at you, John.
So I'm gonna go in order on all the things that you mentioned and so on. So the first one, when you were talking about the division of the funds generating from the nodes, you mentioned that the 50% is used to buy back, 25% goes on the pool basically for the lottery type of things. What about the other 25?
So we've kind of left that at the discretion of the foundation. Right now it's just getting restaked. Right now it's just getting restaked. We have a goal to be a top 5 validator on any network that we are engaging in. That's not the case, obviously. Some of them have been around significantly longer than we started the business. So, for Atom, for example, it's hard to get into the top 5 of Atom when they've been around for quite a significant amount of time, and there's already some pretty well entrenched validators in the top part of the rankings. So 50% for that, the buybacks, 25% for mantradao, and 25% is just at the behest of the foundation, currently being restaked. Potentially could be used for operations expenses, but currently it's just restaking. And I would say, well, particularly with these types of things, we would also take a community approach where if the community wanted to change this and say, okay, we don't want to do 50% buyback anymore, we want to do 75, or we want to do 25, we could vote on this through a community consensus and kind of tweak these numbers a bit.
Fair enough.
So you mentioned the foundation. Sorry, just about the foundation. There was 3 or 5, right? How many are in the foundation now? And those people are elected by the DAO, right?
So the foundation, I'm referring to the DAO, the entity itself.
Okay.
To be honest, we do have a council, which is comprised of 5 individuals at the moment. To be completely honest, we're still building our governance modules out. We want to have a very robust system. When you right now we use Snapshot. I don't know if you've ever messed around with that. It's basically gasless voting on Ethereum, which is great because it's easy and it's free. Which on Ethereum is important.
Nobody wants to pay $60.
Otherwise, no one's going to vote. If anything, you have to pay them. It's hard enough to get people to vote, let alone if you have to pay for it. So Snapshot's awesome. We have a strategy there, but basically, users who stake Ohm can vote, and 1 staked Ohm equals 1 vote, essentially. That's presently how it is. We are also developing a much more complex, much more well thought out governance module for how the DAO is governed. The goal is to definitely move this towards a fully fledged DAO at some point. Definitely not at this point. I think everyone knows that. These things don't go from 0 to 1 like that. Takes time. But if you for example, if you follow the model of how Synthetics did it, they started as a kind of a centralized entity and company and slowly progressed towards this more DAO-like structure. So I think we're starting maybe a little bit more of a hybrid and trying to move more out there.
Nice.
Excellent.
On the burning side, on the 50% that you guys are buying, how can someone verify that? How often does that happen? How is the model around that? Can you talk a little bit more about that?
Sure. Yeah. So I'll say this, we're not burning tokens. We just remove them. We have a lot of our products are, meant to incentivize all different types of economic behaviors. Whether that's on the staking platform, whether that's on the validator nodes, whether that's on the lending, whether that's on the stablecoin minting, whether that's on the swap and AMM, all these things require incentivization to grow the business. So we don't believe that burning at present is a good idea for us. We do remove them from circulation, and they're in verifiable wallets that basically everyone can look at. It's published everywhere. And we're actually building a dashboard which should be launched soon, which will have all these different things very clearly laid out. So we'll have a dashboard for individuals, and they can see their transactional histories, they can see how much they're staking, they can see how much DOT they have, they can see all these different things. But then there's a platform one which will show how much how much tokens have been removed from supply, how much rewards have been given from the mantra pool, what's the TVL, what's the biggest supply markets, what's the biggest borrow market, like all the different data and figures that you could want. That's all going to be very transparently verified for everyone to see.
Isn't that like a sort of recycling at the tokens at that point? Like if you put in that like in a wallet and you can use them for future incentives.
We could, but again, back to the kind of the governance element, this would be something that we would have to pass through a community vote, essentially. I mean, we're not going to move them unless we need it. And to be honest,
the community votes for that.
The community votes it, yeah. And currently, the way that the kind of inflationary mechanism of the staking rewards bucket works, we've basically emitted the tokens over 5 years. So we're not in any rush to have to actually use those tokens. And to be honest, we're not even using all of those tokens that we're emitting on a daily basis. So there's a stockpile. I think that could realistically go for, especially if the token appreciates in price, that could go for 10, 15 years before we would even need to think about potentially something like this. And so for the time being, it's not really an issue. In terms of the frequency of how much we do this, we calculate on a weekly basis. But in operations, we're probably going to be doing it like every 2. We have so many different operational things. We have a bunch of different products for integrating staking pools. We're launching new products on the launchpad, or launching new projects on the launchpad. We're adding projects to the lending product. It's a bit hectic. So having to continually do this on a weekly basis, at least at the present with our team, is just a bit hefty. So we'll do it every 2 weeks, and most likely we'll just be buying straight off of Uniswap.
Fair enough. Got it.
So it's all done on chain.
One of the contracts that I saw on Etherscan is the grants one.
Yes.
How does it work? Like, what type of grants do you guys have? Are they currently available? Are they going to be available in the future?
Yes.
Like, again, took a little bit more.
Sure. No, good question. Yeah, I mean, originally this was meant to be a bucket that, again, is community governed. So grants have to run through governance proposals. They have to be initiated. Through right now. Again, it's all going to be soft governance through Snapshot until we have this like explicitly done on chain. But it's really meant to either support company initiatives, support research and development that supports the mantradao ecosystem, or funds projects which are building within our product ecosystem, whatever. Again, this is all meant to be done through community voting. We have not had any grants. I mean, as you can see, if you checked out the contract, nothing has been touched from that. Currently, I think we have a 3 out of 5 admin multi-sig that can move those tokens. We just haven't had a need for it. No one's really called for it. We'd be happy if someone would ask us for a grant.
Is that for marketing as well?
No, the grants are not for marketing.
No.
Well, I mean, if someone came up with a proposal and they had a great idea surrounding, look at how Polkadot and Kusama do a lot of this stuff. I mean, I think Kusama founded or funded a movie or a show from the Treasury that was about Kusama.
Yeah.
So
fancy explainer video.
Yeah.
To raise awareness, right?
I mean, if someone wants to do that and they have a good idea,
we can do
Holla at me.
That's our shtick. Make content for companies. Yeah, man. We'll put a proposal together.
All right, let's do it.
The hard.
On a more serious note, no, I've one last.
What are you talking about?
I'm trying to get information over here, not to sell a product.
Yeah, maybe we'll talk afterwards, Jordan. But yeah, we can actually do that. But yes, Stefano.
Last thing, and then I stop. This is more on a technical, because you mentioned that you're going on a multi-chain on the launchpad and kind of on the system. How does it work with the bridging over there? Is that you guys are building like the cent grail of the multi-chain, where like a user comes like with whatever token and it's all automatic and so on, or do the users still have to spend those $140, $200 in jumping from one to another?
Yeah, so I mean, there is a reliance on bridges at the moment. I hope that this will become a bit less required down the line. But in the moment, like if you want to bridge to BSC, for example, I mean, there's only a couple different options of how you can do that. We've spoken with the team there, and I know that they have some cool stuff on making it easier for projects to bridge, not just ones that are listed on Binance.com, for example, which is, let's be honest, a very centralized bridge. Makes sense for them. It forces traffic to Binance.com, but it also means that projects not listed on Binance cannot easily, get onto BSC. That being said, I have it on good word that that's being worked on. Matic is a bit different, or Polygon's a bit different. You just need to wrap or map the tokens essentially, and then you can move them over to Polygon. So users will basically have a similar front-end experience. They'll just basically change, through their MetaMask or their Binance wallet or whatever, and their browser extension to be able to move between networks. But you'll see, you're living on a various chain or the other. It's kind of like if you move between, mainnet or Coven or something like that. Some products function and some don't. But we'll have it so that if you move between them, you'll be able to see a similar UI and front end experience.
Got it. Yeah, I mean, don't have other question at the moment.
Okay. Cool.
Anything coming up in the sort of short term, near term that we can leak to our audience?
Sure. So we literally last night gave some more details about the launchpad called Zendit. We'll have our first IDO within the next week or so. We got several lined up already. One thing I can say is that one is a public sale allocation with a bit of a discount, and one is a private sale allocation. So we'll be doing both public and private deals for the community. We have a tier 1 exchange listing coming up shortly. That's all I can say about that.
Tier 1?
We promised tier 1. We promised it within the quarter. So that's coming. And yeah, I mean, we're pretty excited about launching our Ethereum version of the stablecoin this quarter as well. So we're well on the way to hit all of our roadmap that we've laid out since the initial white paper. We've not only hit everything, but we've added other things that we didn't say we were going to do. So that's always a good sign, I think. And we're also looking forward to getting a more detailed roadmap for the future. Maybe with a bit less quarterly. This is going to be done by this exact date, because we've had a couple close calls working till past, or actually right up to midnight on New Year's Eve, for example. But we got it done. So I would prefer not to relive that as much as possible. But anyway, that's all on the way, and we'll have a lot more details on that.
Guys, what's happening with Bondly and your sort of NFT initiatives as well?
Yeah, Bondly's the homies. Shout out to Brandon. So we've done a bunch. Well, we did the poke pets with them, which are blowing up. Those are pretty awesome. Bondly's got some cool stuff. I'm not sure how much I can say on that, to be honest. But we're going to be integrating with Bondly on a lot of different things. And actually, one of the tiers for our launchpad is just holding one of the poke pets, or holding one of our initial NFTs that we launched. So they're smaller. They're on the smaller side of the allocation rankings. But all you need to do is hold the poke pet, and you can potentially access those allocations on the launchpad.
Can you go over the tiers?
Yes. So currently the base tier is
IDOs, what kind of allocations you need?
Currently the base tier is holding a poke pet.
Okay.
The second one is, and we've named them after mountains, with Everest being the highest. So the first one is the base tier, holding the poke pet. Number 2 is holding one of the 88 100 million ohm staked NFTs. It was like a commemorative NFT for reaching 100 million ohm tokens staked on the native platform. This was done in December, I think, and it basically, the utility is it gives you entitlement to airdrops which we're going to be doing another one today. So they get like a monthly airdrop essentially for holding this NFT. They actually spend a decent amount of money on these NFTs, but I think so far it seems like it's a good investment for what they've gotten back in the 3 months since they've bought it. The second tier. Third tier is you have to hold 30,000 ohm. Just hold it, and you have to hold these before the actual allocation launches. Fourth tier is you have to stake 40,000 tokens. Fifth tier is you have to supply 50,000 ohm tokens on Zentrust. So Zentrust is the money markets. In our mind, Zentrust or the lending product is, if you supply on that, you're going to do other things which have, revenue generating business for the foundation. Whereas just staking, we don't actually generate any revenue from that. It's just removing tokens from circulation. Obviously, holding is good, but you can sell after. So those are the 5 tiers at present. We have an unlimited capacity of how many whitelists we can do. We're going to be playing around with these tiers as per community feedback. So on a case by case basis, but that's kind of where we're starting, and we'll see how it goes.
Awesome. Cool. Well, look, we'd love to have you back on for a live AMA with our audience in the coming weeks for sure, John. We look forward to introducing the project to our audience. I'm sure many of them already know about you. We had a flood of questions after Lisa called you out as the point of the week a few weeks ago. So a lot of people are looking at you.
Shout out to Lisa for that.
Yeah. So any closing questions from firstly you, Stefano?
No, it's all good. Like, don't have anything.
You want to be happy about when Stefano says it's all good. He usually rips the hell out of half the people we use.
That's good. Thanks for going easy on me.
Yeah, Mr. Gonzo, any final comments or questions from yourself?
Yeah, just maybe I don't know. You can outline a bit of like maybe your marketing directives and like what are you going to do for adoption? What do you have planned in the next kind of 6 months, year?
Yeah, sure. So I think from the marketing perspective, we do have some pretty major product improvements that are coming. Obviously, launchpads in and of themselves bring a ton of eyes, and to be honest, from our perspective, that's a better way to do it. So just to maybe give a little bit more business detail, like we don't charge for these launchpads. It's free. It's commission free. We just want more people to come to the platform. They come to the platform, they get stuck, they use other things, they stake, they delegate to the nodes, they do all these other things. So it's like the long tail client acquisition, I guess. One thing we do require though is we do want to take at least some allocation in every deal. It can be locked, it can be whatever, but that's the plan. We want to have skin in the game. So that's going to bring a lot of eyes, in my opinion. And again, you bring in these communities, they also run the staking pools, they use platform. This kind of stuff continues to grow. We have a pretty awesome initiative, NFT initiative and strategy that's working together with Bondly. We've have some other artists that are going to be coming in. Aki, who and Will are working on this NFT strategy, which is going to be released and further detailed in the coming future. NFTs are super hot right now. Actually, Will just got one of the Beeple NFTs, like the physical ones, in the mail yesterday, sitting on his desk.
Pyrex thing,
right over there. Actually, hold on. Let me bring it on.
Yeah, exactly. Nice. Those are cool.
Yeah, super cool. Shout out to Beeple. We've actually talked to him. He's an awesome dude.
Kill that thing.
Shout out to Steve for introducing. Anyway, a lot of shout outs. So NFTs are coming. But also some key ones, I guess. Obviously, these multi-chain integrations are going to be big. We want to really target these various new, like other communities, to list on our products, to run launchpads, to do all these different things. And we're going to be heavily targeting these various communities. And then again, every time we run a node for a new network, that's another community that comes in, another community that starts holding Ohm. So all these things are just building this, massive global kind of agnostic network of Sherpas. And then from a more Polkadot specific side, because unfortunately we didn't talk too much about that. We're really excited about where that's headed. Parachain coming up hopefully not too distant future. So we're looking forward to kind of unleashing what we've been building over there too. So that should be exciting. We'd be more than happy to talk to you about some of the video stuff with the grant. So holla at me after.
Yeah, absolutely. Well, look, we actually do a weekly show with the three of us. Lisa's a frequent guest as well, where we really sort of dig it individually and get out there and actually use the token and discuss it each week. So we look forward to following your progress. It's great to have spoken with you, and we'll definitely be looking at what you do on the regular. And of course, we'd love to have you back on for a live show with our audience in the coming weeks as well. That'll be fantastic.
Awesome.
So yeah, John, it's been an absolute pleasure. We look forward to having a really close look at what you guys are doing. So there's a hell of a lot here to unpack. So we'll be doing that.
Yeah. Yeah, likewise. Appreciate it, guys. It was nice talking to you.
Yeah, cool. And if you want to hang around now, we'll have a chat offline. But I'll say goodbye to the audience, and thank you to my co-hosts Stefano and Mr. Gonzo as always, and you audience. You know the deal. The people that are here at the end of this long form interview, well done. You are doing the right thing, learning as much about these projects. And join us on our regular show, 1 BTC and 32 Ethereum, where we'll give you our individual thoughts and do a bit of a deep dive on the weekly into this project. But John, thank you once again, sir, and would love to have you back in the very near future.
Yeah, thanks so much, guys. Appreciate it. Looking forward to coming back on.